Hello there. We're so excited that you have decided to join us here for today. I have a very special guest with us. Not only a special guest, but a great guy, a friend of mine. I look at him as a mentor. But here's a secret that he might not want you guys to know. He's one of the good guys, right? So we have Mr. Robin Lewis with us here, and he is from RLIO, the Robin Lewis Insurance Organization. So Robin, just tell us a little bit about yourself, if you would, sir. And I don't only want the professional stuff. I want that stuff that's in the closet, but not way back deep in the closet. So just go ahead and tell us a little bit about yourself.
Well, hey, Neil, thank you. So good to be here with you. I tell you, I have learned so much from you, sir. You've been a mentor to me, and I appreciate who you are and what you're doing. And I'm glad to be with you here today to support in some way. So yeah, I'm Robin. I'm from Jamaica originally, so I'm an island guy.
We won't hold that against you.
Yeah, I've been living here in Florida for over 40 years, though. So this is home for me. I've been here for most of my life. I am married. Edna, my wife, we've been married for 33 years now. This year we'll celebrate 34 in August. We have one daughter, Jillian, who is also married and now living in Gainesville. So we're hoping for grandkids. No grandkids yet. But we're hoping for grandkids, with only one child, we're hoping for a lot of grandkids.
No pressure.
Yeah. We kind of held off on the pressure on them. I think more recently now that they have said that they're ready and they want to, maybe now we're putting a little bit more pressure on, but we've kind of held off, and they've been married for 8 years actually.
Oh, wow.
And, so they took their time. And we didn't really put any pressure on them through that time there, but yeah. And so I got into the insurance business in 1982, Neil. So I've been in the insurance business for, a good while.
Now, Robin, you do know that I was born in 1982, and we're just going to leave that right there.
Oh my goodness. Making me feel old now, man. Oh my goodness.
I'm going to leave that there, and you're going to continue on, sir.
Yeah. No, but I was just saying, that we actually started on our own Robin Lewis Insurance Organization in 1995. So we just celebrated 25 years of being in business for ourselves. And we're here in the South Florida area. We've been here for that whole time. And, I like to say that we help people to sleep well at night. So the idea behind insurance is that if there's an accident causing damage to property, or somebody gets hurt, or they get sued, that we provide the wherewithal to be able to replace, restore, rebuild, and even provide for their defense with an attorney and so on. So that's kind of what we do. I'm an independent agent, so we represent many carriers, so we can kind of shop the market to find the right carrier for the customer.
Okay, so I'm going to jump right in, and I'm just going to start hitting you with a barrage of questions, because there's so much, really there's too much for us to talk about in one sitting. So I'm going to go ahead and let that be my segue into my invite to the next time here with us. But we really want to look at a few things today. So me as a real estate broker and agent, I know I have one opinion of insurance. And then as a homeowner, I have another opinion of insurance, right? And then I'm sure there are other ideas of insurance that I just don't even know. So I just want to begin by asking, as we talk about the exciting world of insurance, and I know people might be like, Neil, exciting. Well, no, it is exciting. It's confusing. It's frustrating. It can even be scary, right? Yeah. So I'm just going to ask you, because we're going to have agents watching this, we're going to have home owners already, and even some potential buyers looking at this video. So the first thing that I want to ask you in terms of the consumer, so whether they are a home owner already or a home buyer and they're considering insurance, what's the best piece or the first piece of advice that you would give? Let's go first to someone looking to purchase a property and have to get home insurance. What's one of the first things that you're going to advise them to do?
Well, that is a really good question, by the way. And what I would say is it's who, and I think it's true whether you're a real estate in the real estate end of it, or you're the consumer, the buyer, or the owner of the home. Who you buy from is most important. And what I mean that I don't just mean the company, but certainly the company, right? So the company, you want to make sure that they are, you know, they have the funds, they have the wherewithal, they can back up what they claim. But starting with the agent or the agency, you want to be with somebody that's trustworthy. I suggest that shopping with an independent agent gives you a little edge also, because they are not, an independent agent is not, you know, limited by just one carrier and what that carrier allows, but they can find the carrier to be most suitable for the situation and for the client. So I think an independent agent is also good. I think you want to be with somebody who you can grow with. It's one of the cool things about what we do is we get to develop relationships. You know, I get to see not just the purchase of the home, I get to see the baby born, I get to see the baby graduate, I get to see them driving the car, getting their license, going to college, graduating. I get to see businesses started. I get to see, you know, grandkids come along and so on, you know, the vacation home bought and so on. And so we are literally building relationships. So as a homeowner, you're wanting to get somebody that you can build a relationship with. You enjoy being around. You like what they're about, and certainly they deliver. And so that's one of the things that I would say. I think subsequent to that, there are specific things that we can talk about, Neil, and you'll probably get to some of those with your questions, but that would be the way I would answer that question.
Okay, now you mentioned something that I'm going to ask you to expand just a bit on. You don't have to give us everything, but just the idea of an independent agent versus, I guess, a dedicated agent or the such. And I know you just said that they're not limited, but why does that matter to me? If I am the purchaser of insurance, what am I looking for? You mentioned something about the who as far as the agent. So how do I know who's an independent agent? How do I know if I'm going to be getting the best quotes? Is there something that I can do when reaching out or asking questions that I would know?
Wow. Now that is a really good question. And there's a few that you've asked there. So let me try and hit and each of them good. First of all, let's just touch on, you have exclusive agents and you have independent agents. So the exclusive agents are agents that only represent one particular carrier. So, you know, the ones to mention out there would be like a State Farm or Allstate or Geico, for example. They pretty much represent one carrier, right? And by the way, in saying that, I don't knock them. I actually work with some of them. There's some times where the program that they have to offer is the best program for this particular need. And so they serve a good place. And then the independent agent, however, like myself, we have multi-carrier relationships. Quite honestly, those I don't represent directly, I can access through brokers. And so that's one of the big differences, right? And then, so you would know by just asking that, or you would know by who you're going to. Like if you're going to an Allstate or a State Farm or a Geico, that's pretty much an exclusive agent. They only represent that carrier. And if you're going to an independent agent, they would usually tell you that they represent multi-carriers. Now, you can have, and you know, who that independent agent represents does vary. So one of the things that we try to do, especially in the market right now, in the homeowners market, the way that it is, it's a very hard market right now. A lot of carriers have stopped writing or raised rates or tightened up their underwriting to where they limit the number of policies that they're writing. And so we're always looking to find other carriers, you know, maybe other carriers are coming into the market. So one independent agent might have more carriers than the other. So that is something to consider. So you might even ask that detail, you know, which companies are you going to shop for me? Or how many companies are you going to shop? That's one thing you could ask.
Okay.
And
Now,
then, so one of the big differences, sorry, go ahead.
no. You go ahead and tell me the difference because you just said something that I'm curious
I was just
about.
going to
Go
say,
ahead.
I was just going to say one of the big differences so understanding I just explained the difference between the two, but one of the big differences in terms of what it means to the realtor, to the consumer, is you have different, the independent agent doesn't have to try to fit the situation or the client into one box.
Mm-hmm.
So the company, the exclusive company, has a box, a set of underwriting that if it doesn't fit here, then they're going to try to make it fit, or it just doesn't fit. With the independent agent, they can, if it doesn't fit in this carrier, they can try and find a carrier where this situation fits. That's one of the big advantages, I think, of an independent agency and what they bring to the table.
Okay, so you mentioned that in this market, that it's a hard market, that we have some carriers who are leaving and limited. What causes that, and what impact does that have on the purchaser of insurance?
Oh my goodness, that's one of the ones where we would need to get together again to really cover, Neil. But I'm going to try and give you the quick view of that. What has happened? This is particularly in the Tri-County area.
Talking about when you say Tri-County, you mean Broward, Miami-Dade, and Palm Beach.
Broward. Thank you for that. And yes, specifically. And what has happened is that there has been a tremendous abusive amount of claims, and many of those in the last few years, and many of those have involved litigation, right? Lawsuits. Attorneys have gotten involved, and they have been able to, the companies have been able to find that there are a few companies that actually are responsible for a lot of these claims. And so there are third parties that have really been taking advantage of situations, if you will. That's the reality of what's happened. And then you have that coupled with the fact that we've had pretty busy storm seasons. Last year, we had, I think, 12 that actually landed on the U.S., a total of 30 hurricanes that came through. And then, so hurricanes have also created, a significant amount of payout. And then also, there are people that they come knocking on doors, offering to homeowners that they can get them new roofs and new bathrooms and new kitchens and so on. And oftentimes what ends up happening is that they file these claims and take advantage of situations. And so the companies have been paying out hundreds of millions of dollars, billions of dollars, actually, when you add it all up. And so they have been operating at losses for the last 7 or 8 years, where they have paid out underwriting. They've paid out way more than what they've taken in. Now, obviously, insurance companies have years that they don't pay out as much as they take in also, right? And so they have profitable years. But the last 7 years, it's been significantly higher. And because of what's causing it, they are trying to find ways to battle that. But what that's caused, Neil, is that the reinsurance, so the insurance companies buy insurance. They don't take on the risk, all of the risk themselves, especially in Florida. All the companies do that now. And the cost of that reinsurance has increased significantly because the reinsurers are very they're scared. Actually, they don't trust Florida and what's happening in Florida, and so they have raised their rates significantly. And so that's why the carriers now, they can't charge enough to make up the difference. And so that's why a lot of them have stopped writing, or changed their underwriting to where it limits how much they write. And they have all raised their rates. So that's kind of what's the overview of what's happening right now.
Understood. All right. So now let's dive into the fun, scary part of it, because this is scary because as a real estate agent, we don't care anything about insurance. We don't care nothing about insurance, Robin. I don't care nothing about you, your business, your services until I need my client to get insurance so they can qualify so that the loan can get approved. You know exactly what I'm talking about. Yeah. That's when I call you, we call you, your phone is blowing up, the emails are coming in. Hey, we need insurance, we need insurance. And then we have our clients and you know this, the way we're typically going through and to get insurance is what's the lowest principal, right? Well, what's the lowest out of pocket just so they can get the loan? And I do know that's the wrong way to do it, right? So let me ask you the first part of this. What should we be looking at as, I'm going to say the consumer, but then also as real estate agents, right? Because we're working for the best interest of our customer or client or the transaction. So besides the just principal amount that we have to pay, what should we be looking at when it comes to getting homeowners insurance?
Yeah, it's another great question. And it really is something that, individually, we take a look at, right? Because there's so many things that come into play. What I like to point out is that, and by the way, you said insurance is exciting, and you and I know it's not. Most people don't want to. I'm okay with it, Neil. I've been doing insurance long enough now that I get it. People don't want to even pay for insurance. It's something that you pay for that you hope you never have to use. So who likes to pay for something that they hope they never have to use, right? So I think that's one of the main reasons why people just want low price. Give me the lowest price, because insurance is just something I need to have. I hope I never have to use it, so I don't want to pay for it, right? Mm-hmm. And so the consideration that I give is to recognize that when people are happy to see me, is when they do have a need. I had a client the other day. They had somebody, a neighbor, drown in their pool, and they got sued. They were happy to have insurance.
Now, hold on. Their neighbor drowned in their pool.
Correct.
Right.
So these are friends, and it was unfortunate. It was a tragic accident, but the neighbor sued them, and so their insurance, paid for their defense and also paid, over $100,000 on their behalf.
Now on that, Robin, so when we hear home insurance, we never think that's going to be us when we're buying a home or when we're purchasing, when we're signing binding the insurance, right? We never think that's going to be us, but I'm sure none of your clients ever thought that was going to be them, exactly. Right? And so we tend to think that homeowners insurance or just insurance on the property, okay, if there's water damage, if the hurricane knocks it down, that's it. But there are so many different coverages and what's included and excluded that is really case by case basis, if I'm not mistaken, correct?
Yes. And so, yes, there's so many things that come into play there, but the standard homeowners policy covers you for things like fire, lightning, windstorm or hailstorm, burglary or theft. If your plumbing or appliances burst and leaks and floods the home, damage caused from riot or civil commotion. If a vehicle or aircraft hits the building. And so there are a lot of different perils that a homeowner policy covers, right? And so you want to make sure that your building, your dwelling, your home is covered adequately. So what if there is a fire or a hurricane that totally destroys your home? What is it going to take to rebuild or replace that home? And you want to make sure you have adequate coverage for that. You want to make sure you have coverage for your personal property. That's also included in the homeowner's policy. Your TV, your all of your electronics, your furniture, your clothing, and even things like your jewelry and stuff like that, artware and all that stuff. You want to make sure to have adequate coverage there. And then liability, we mentioned liability. If somebody gets hurt and they sue you, now this can happen at the property or away from the property. You know, you're in the public supermarket and by accident run over somebody with the shopping cart, right? You know, in other words, it doesn't have to be at your home. But if you're, another thing, by the way, which is a big thing today, and we don't talk about it enough, I don't talk about it enough, but it's a good one to consider, is personal injury liability. That's the one if you get sued for like libel or slander. I had an agent tell me, this wasn't my client, but I had an agent tell me that his client got sued because their teenager on social media, they were like bad mouthing somebody else, and that somebody else's parents sued them because of it. And so that's personal injury, libel, slander. That's another thing that you can get covered on your homeowner's policy. Now, not all the companies offer that. So that's one that you would want to discuss. And so there, as you can see, there are different things. And then also you want to look at your deductibles, how much is subtracted before you get paid. So your deductible, you know, if you have a claim and you have $1,000 deductible and you have a $10,000 claim, they automatically subtract 1,000 and pay you the difference, pay you $9 then, for example. The higher the deductible is, the lower the premium. So sometimes, you know, more often than not these days, people are going with higher deductibles. So that's something to look at and consider. You know, don't take a deductible that you don't have the wherewithal to kind of handle in the event that you do have that claim. Sometimes I think people might blindly get that. I had somebody just yesterday, I'll give you an example. They were comparing quotes that they had got with somebody else with me. And they said to me, I'm going to go with this other quote because it was $100 less. And I said to them, let me take a look at that quote because, you know, there might be some things that you can't see that I might be able to see. If you have a quote that's going to be better for you, believe me, Mr. Smith, we're going to tell you to go with that quote. So I'm only asking for it for your best interest. The long story short, Neil, is they were giving him a $10,000 deductible for hurricane, where we were giving him a $3,800 deductible for hurricane. Big difference in deductible.
For $100 difference on the principal. Big difference.
In fact, no, here's what happened. When we actually compared the same deductible, we were $400 lower than the quote that he had.
Wow.
And so, you know, deductible is one. And sometimes, you know, we automatically go to that higher deductible to lower the premium. And it's okay. Insurance is about managing risk. If you understand the risk that you're taking and you want to go ahead and take that risk, that's fine. Or if it's something you're doing just right now so that you can get closed, and you're aware of it and you have intentions of maybe changing it down the road. But in other words, those are the things for your buyers, your sellers, your realtors to consider.
Now I want to jump in right here because I know that you said that if you are aware of the risk, but then you also, so for instance, you talked about the personal liability, right? All of these things that you put in there. Now, we don't get this. We don't just know this just from getting a quote sent over to us via email, right? Yeah. So this is what it sounds like what we should be doing instead of just requesting quotes, either as an end user, buyer, or an agent. We do want you to have a conversation at some point, pretty much as quickly as possible, as soon as possible, so you can find out what the buyer's needs are, if they're going to be looking at getting one policy right now for long term, or if we need to get them in something to close and then maybe transition later. Is that correct?
100%, Neil. And it's the same in any industry. It's the same in your industry, I'm sure. That until you really know the needs, until you really know the situation for the client, until the doctor really understands what's going on with their patient, they really can't, prescribe anything, right? And it's the same for us. 100% agree with you. And today, there are so many variables that it's even more important for us to do that.
Okay, so I want you to touch on two things. The first one is a fun one for me, and it is because, well, it's not fun. It's really an eye opener. So you're going through having a conversation with a purchaser of insurance, and you ask them a question: do you have any pets? Right?
Yeah.
And they say yes. Like me, I have a boxer pit mix and I have a blue nose pit. And I say, yes, I do. I have a boxer pit and a pit. Why do you care if I have pets or not?
Yes, and that's a really good question. And it's unfortunate. And by the way, you and I haven't spoken about this before. Do you actually have those two
Oh,
pits?
yes, absolutely. So the boxer
I'm
pit,
so
he
pleased to
is
hear.
Parker, and Ash is the blue nose pit.
Oh, that's awesome. My sister-in-law has two pits also, and beautiful dogs. But okay, I know time is limited. Here is the key there. Unfortunately, there are some breeds, dog breeds, that have a bad rap. There's some dog breeds that have been labeled. You and I know it really has to do with how the dog is raised and so on, right? And not so much the breed. But unfortunately, if you have so many incidents with a particular breed, then they sort of get labeled a certain way.
Yes.
And what happens? So here's the situation that it can cause. If the dog causes injury to somebody else and they sue you as the dog owner, your homeowner's insurance can come into play. A lot of policies now exclude animal liability. And if you want to have that coverage, we need to either buy separate coverage for that or find a company that will offer that coverage. That's the first thing to consider. The second thing to consider is that there are some carriers that if you have, we have a list of dog breeds, and by the way, unfortunately, pits are one of them. German Shepherds, Rottweilers. I mean, there's a short list of dog breeds that if they're on that list, there's some carriers that won't even write that policy. It's unfortunate. Insurance is about managing risk. Mm-hmm. And so, if they're aware of a heightened risk, a heightened exposure, if you will, then some of them are not willing to take on that risk. Now there are carriers that will take it on. Some will exclude animal liability for any ones that are on that list. Then if we want to get coverage, we can usually get a separate animal liability policy for Parker and what was Ash. So usually you can get coverage. That's the good news for anybody who has dogs that are on that breed list. And by the way, it's not just dogs. There could be other things. Some people have pet lizards or pet snakes or, different pet tigers. Some people have pet tigers, pet pigs, right? So there's not just dogs. There are different types of pets that could cause additional risk. And so that's the reason for that consideration. Is there a possibility, is there a heightened risk of causing damage or injury to somebody else? And if that's the case, then because your policy could come into play through a lawsuit, that's where it could, that's why it is a factor.
Good stuff. Oh, absolutely. Because that's one of those questions I know that when you're asking my clients, when I send them over to you, they're like, Robin asked if I had pets and I said yes. And then she said, okay, you're good. And so that's, for me, it was an eye opener. And I always want to pass along that information because what we don't want to make decisions with misinformation only to find ourselves being that one person. Well, it would never happen to me. And then it does happen only to find out that you are still out there exposed. Now, the next one, I've already agreed, and I'm going to assume that you accepted my invitation to come back very soon, right? Okay. So on this one, I know this one is a big one. We talked about this, I would say a month ago, and I'm going to throw this one out there to you. Flood versus water damage. Okay, so we don't understand here. Many people don't understand the difference in flood damage versus water damage. Why do I need it? Right, because our thing, once again, is, well, it says that I don't have to have flood insurance, right? But then I would say not too long ago, we found ourselves in a situation where people were holding their breath. So could you just explain the difference between flood damage and water damage? And then, why we as purchasers of insurance have to really analyze the risk if we're going to purchase flood or not.
Yes. And that's another great question. And it's your listeners, your viewers are blessed to have you, Neil. These are the type of thing that we need to do. This makes all the difference for somebody. If you think about some of the questions that you have asked me, we talked about insurance is really for when you have the need. If we wait until we have the need to understand some of these things, it might be too late. So I just wanted to commend you, first of all, for what you're doing and bringing this to your viewers. This will go a long way in serving them. So regarding flood, it is a big thing. I had a customer just recently say that they didn't have flood insurance, and they called me wanting to buy flood insurance because the recent, we had consecutive days of rain that you're talking about. The water came this close to their garage, and they realized how easily they could get flooding. So let's explain the differences first of all, because if you remember, I did say that your homeowner's policy covers you if your plumbing or appliances bursts and leaks and floods your home. So that is covered under your homeowner's policy. It's called water damage. That's the one that you were referring to. Flooding, for insurance purposes, is the rising up of water. So if we have a lot of rainfall and the water level gets higher and higher and floods your home, that is specifically excluded by the homeowner's policy.
Wait. So Robin, you're telling me that if a pipe bursts and floods my house, that could be covered. But if it rains, that is excluded from homeowners.
Specifically excluded.
Okay.
That is correct. That is correct. And usually they have that in big bold lettering, by the way, on the policies. But so the rising up of water is the big difference, right? If you have a lot of rainfall and the water rises and floods the home, that's where a flood insurance policy could come in. And unfortunately, what has happened in our area, let's face it, in Florida, we're surrounded by water, right? The ocean all the way around us. We're flat, right? The reality is that all of Florida is in a flood zone. But what happens is they have the standard flood zone, and then they have the preferred flood zone. And oftentimes when you're in a preferred flood zone, because the mortgage company doesn't require you to buy flood insurance, all of a sudden you hear, oh, I don't need flood insurance. I'm not in a flood zone. The reality is that you are in a flood zone. You're just in a preferred zone. And the numbers show, Neil, that 30% or more of the flood claims that are processed are in a preferred zone. So in a preferred zone doesn't mean that you can't get flooded. And I live in Pembroke Pines, and I live in a preferred flood zone area. I still carry flood insurance. We still recommend and encourage people to buy flood insurance because you can get flooded. Now, unfortunately, the people who determine the zones, which is FEMA, they change these things so often anyway. The reality is they just changed a lot of Broward County. Maybe it's about 5 years ago, where a lot of the zones were rezoned to preferred zones. And in a preferred zone, the mortgage company doesn't require you to buy flood insurance. A lot of people decided that they weren't going to carry flood insurance any longer. Well, guess what? FEMA is now in the process of rezoning Broward County. And what we heard is the majority of zones are going to change back to standard flood zones. And so then the mortgage company is going to require them to buy flood insurance. And so do we really want to follow that? Which one is right? So one day they're saying, I'm in a standard flood zone. The next day they're saying I'm in a preferred zone. do we really want to rely on, well, that's the determining factor on whether or not I buy flood insurance? You know, especially if a few years later they're changing their tune.
Mm-hmm.
And so we always recommend people to consider flood insurance. In a preferred zone, they can get it at a lower cost than in a standard zone. It's so they give them a better rate, because what the preferred versus standard means is that over so many years, they haven't had that much flooding in that particular area. Doesn't mean they can't have it, but it means they haven't had. You with me?
Yes.
Now, a good example I'm going to give you two. One is Hurricane Sandy that went up the northeast a few years back in New York, New Jersey area. Got, Sandy. It was just the right thing that happened. You had a hurricane coming up north, and you had some kind of snowstorm or some kind of cold, cycle coming down, and they clashed. And the New Jersey area in particular got a lot of flooding. The majority of people in that area were in preferred zones and didn't carry flood insurance. I don't know if you remember, it took years to rebuild that area because people didn't carry the flood insurance. So the point is, you can even have a hurricane. I know we're getting in a little detail here, but I want to give you a quick example. You can have a hurricane that the wind itself didn't cause any damage, but along with the hurricane came a lot of rainfall or storm surge. And if that's what causes the flooding, that's not covered under the hurricane portion of the policy. That's flooding. That's actual flooding. Hurricane Wilma, is it Wilma that hit Louisiana? Yes. New Orleans area, 1995, I believe it was. A lot of flooding took place in that with that. And a lot of that area in New Orleans was a preferred zone. So a lot of those people did not carry flood insurance, and they got flooded. And so it's definitely something to consider. It's unfortunate we have not done as good a job, we being the insurance industry, in helping people to understand that. And so thank you for giving me the opportunity to talk about that, because that's something I think a lot of people are not aware of.
My pleasure, sir. So, Robin, I just want to say thank you for your time. You're an absolute treat. Once again, I just, to sum it up, he's one of the good guys, everyone. So just to go ahead and plant these seeds, I know we talked a lot about homeowners, insurance and about the property, but I want some of your input on the different types of insurance, because I believe in building relationships, right? And you were talking about whether it's going to be when they start the business or when the kids are growing up and they need insurance, or drivers, so the entire thing. I want input on that in the next time that we're together, because I really want people to know, well, I want to be with someone that's going to be with me for the longevity of the phases, right? To be here when we're, just getting our house, to starting our family, to watching kids go through high school and graduate, to have grandkids. So I just want to hear all about this bundling and how do we work it and how do we know what's good, what's not, and what questions to ask, because I believe in being an intelligent shopper, an intelligent consumer, so that we know the right things to ask of the right people. So I'm going to do this. I'm going to make sure that in this video, we put all of your contact info. I know that you are a man after my own heart, and you're quick to respond. So I'll get that on here. Anything that you want to share before we go and before we close out this episode, sir?
Well, I just want to let you know I'm proud of you. I appreciate who you are, what you're about. I think it goes a long way for strengthening our community. So you're about taking care of people, making sure that people have the information that they need to make the best and the right decision for them. And it's about them. I love that about you, Neil. If you help enough other people get what they want, you will get what you want. And I appreciate that about you. And I'm glad to be a part of it. I'm happy to be a part of it, adding value to your listeners, your viewers. And I know that they appreciate who you are and what you're doing. And so I just want to say that, and thanks. I'm proud of you.
All right. Well, thank you, sir. I'm going to tell you, along with everyone else here, that I love you. God loves you. There's nothing you could do about it. And until the next time that I see you or you see me, don't be average, be world renowned. You guys take care.